Good morning and welcome, everyone. We have hit double figures with episode 10 of Mortgage News Live, coming to you this week on this lovely spring sunny day. Thank you, as always, to our sponsors, MPowered, the Intermediary, and of course, Newspage, for their support and endless supply of dad jokes. We have another interesting show this morning where we will mainly be talking about the new build arena. And this is usually something that gets a lot of people hot under the collar, or mainly just me, I'm not sure. In the news over the past week, we have seen, as expected, the Bank of England MPC voted by a majority of 8-1 to maintain bank rate at 5.25, with one member preferring to reduce base rate by 0.25%. This decision came after inflation had fallen by a larger than anticipated amount, 3.4%. Whilst the outcome was predictable, there is some comfort in that at least there was no member of the committee voting for a rise this month. And whilst this shift is a clear indication of future direction of travel, it is nonetheless another opportunity missed for an early rate cut, which is something the country is crying out for. The discussion is now whether or not the Bank of England will move before the Fed in the US or be typically British and polite, allowing our friends across the pond to make the first move. Being brave is not, unfortunately, what the current governor tends to do. Swap rates have dipped a touch, but we have not really seen any big downward movements from lenders as yet. What is everyone waiting for? We need sub 4% mortgage back pronto, please. But enough of my inane ramblings and over to this week's rather wonderful panel of soothsayers nervously waiting in the wings. We will be discussing some of this and looking at what is going on in the new build world. So joining us today are Craig Hall, the Director of New Homes Financial Services at LSL. Hello, Craig.
Good morning.
Scott Howitt from Chartwell Mortgages. Hi, Scott.
Good morning.
And Paul Kane, Head of Distribution from MPowered.
Morning,
How are you, Paul?
Yeah, all good, thank you.
Good. So before we get into new build, then I just want to cover off the base rate decision. With some are now suggesting the first cut will be in July, with another following before an election, whilst others are saying that the bank will have to move quicker, and we could see 1% off this year, with rates ending 2025 at 3%. What are your thoughts on this? Paul, I'll come to you first. What are you thinking?
I think we got the expected decision, and as you rightly say, it was an 8-1 vote, and at least one was for a cut. So I think it's just a question of timing as to when base rate comes down and how quick it comes down. So I think the consensus is maybe 2 or 3 cuts, but it's just a question of when the trigger's pulled, because the inflation number down to 3.4% was really, really welcome. And, and most commentators are expecting that to come down even sharper and down to 2% really, really quickly. So I think it's literally is take your pick. Is it going to be July, August, September? Would they do really sexy and do a really big cut straight away? But I think they'll probably do it in degrees of 0.25 is where I'd be betting. But obviously movement is coming down, which is all great news. And as you say, Monty, I think swaps had priced in that decision. So I think probably the next few weeks swaps will give us an indication of how quick we think the bank's going to move. But I think it's as expected, but I think I'm like you. They tend to be more cautious than sort of ambitious. So probably 2 or 3 relatively small 0.25 cuts over the summer. That would be where I'd be putting my best guess on.
Yeah, first cut July, I think.
Okay,
for what it's worth. Scott, what?
Yeah, I think probably I'd agree wholeheartedly with what you've both said. To be fair, I think it's quite clear that we've been following this line of inflation for a long time, and it's playing itself out. And I think they're just going to sit tight and just see what happens. To be honest, I think fingers crossed. I think we're right on the cusp. So I think all the indicators would clearly show that it's going to go one way, but it's like everyone said, when is that going to happen? I'd like to think before July, to be fair, but I think they're just going to sit tight on this inflation line and see what happens there.
Craig, any thoughts from you on this?
Yeah, I mean, the general consensus from amongst lender conversations is 2 or 3 this year, as has been said already. There was a suggestion maybe May or June. I think we might see May might be too soon. I think we might. Obviously, we've got the energy price cap kicking in, haven't we, in April, which will then we'll see that in inflation figures probably reported in May. So yeah, to act in May might be too soon. So probably June. I'm going to go maybe a month earlier, maybe an early summer present. And as you say, it's anybody's guess, isn't it, as to where we'll end up? I mean, we've heard all sorts of predictions this year, but I think the main thing is that the sort of trend is going in the right direction, isn't it? And longer term, I mean, what the recent budget, there's a suggestion that inflation could fall below 2% and remain below 2% for a while. So, look, compared to where we were of double-digit inflation and everything else that goes with that, we're heading in the right direction. It's just a question of when, isn't it?
Yeah, it looks pretty. It's interesting the amount of people who are now coming out and saying, some of the big institutions, that actually that the governor will need to go hard at it because he's already too late and missing the boat. So it'll be interesting to see what actually happens.
We saw that the other way, didn't we? The lag effect.
Yeah.
I mean, as we know, a lot of people were tied in on fixed, and the rates kept going up, but it wasn't really biting because it was benefiting the savers, but not those on a mortgage. So it was these are really what we saw over that sort of 18-month period. But we threw it now, and hopefully now heading in the other direction. Just a question of when.
And Scott, do you think? Sorry, go on.
Yeah, just on that. Do you think that we all know kind of the mood of travel on this? Is that causing consumers to sit on their hands a little bit and go, we can all reading the financial press, things are going to get cheaper and cheaper? Is that stopping?
You see, you just read my next question. That's pretty much what I was going to say. So yeah, I agree. Go on, Scott.
Yeah, I think we've had a difficult time of it. I think the last 4 years have been very difficult. I think the last probably up to October, November time, following a disastrous mini budget the year before, I think it was very difficult. And I think consumer confidence was completely knocked. It was shot. And you can see that in the number of just people out there actually looking for mortgages. And obviously we work, in the new builds sort of sector predominantly in terms of new business. The footfall and the traffic going through those sites just took a real hit.
Yeah.
But what's happened is, interestingly, I think this sort of little bit of a recovery, if you like, from October onwards, and I would certainly say for January, February, March, we're going to talk about activity in this quarter. It's gone the complete opposite way. It's gone completely opposite way, and all the indicators from everybody, in not just in new build but across the sector, is that numbers are up, and I would say footfall is probably as much as 30-35% up on the same time last year, which is, from our point of view, in our sector, in this industry, it's really encouraging. It's positive. So I think it has. I think this little glimmer of green shoots, call it what you will, has definitely had an impact for sure. And I think. Do
you think Easter will stall it a bit? Do you think?
Yeah, I think. I mean, March in particular. January was a great month. February was a record month.
February was really good.
A 20-day month, a 29-day month, you're going, wow, that's amazing. But I think it has started to slow a little bit. But I think what's on the horizon with inflation, potential base rate cuts, lenders are sitting on the fence a little bit at the minute. If you look at a couple of lenders that have actually made a bit of a jump, you've got one going one way and Coventry going another, which is quite peculiar. So it sort of skews the market a little bit, that, to be fair. I'm not sure what's going off there, but I think it's really encouraging. The start of the year has been really encouraging.
I think that's the question, really. What we've seen it again today with lenders reducing rates but increasing some other rates, and it doesn't seem to be any real just sense being made of what the market is doing and what swaps are doing, and that's not relating into. Usually you can see, okay, swaps are on a downward trajectory or they're on an upward trajectory, and and I know what's going to happen with rates. But at the moment, certainly the last 3-4 weeks, it's just been weird. There's been, as I say, lenders releasing new products, of which half are going up and half are going down. What's the reason for that, Paul?
I think it could be an element of appetite. It can also be timing in terms of the tranches you've taken. So there's a whole bunch of reasons that could impact it. So, you know, if you're looking for the logical, if swaps are going down, everything goes down, then you're not, as you rightly say, you're not seeing it. I mean, we're certainly at the moment playing a lot more competitively in the sub 75 and in particular sub 60. Mainly for us, because, you know, we want to prove our business case on automation and getting fast decisions. So, you know, the best place for us as a lender to deploy our rates are at that low LTV.
Yeah, that makes sense.
It makes, you know, we can't get the same output that we want in the higher LTV space. So there's a bunch of factors in there. But I think generally I'd sort of fall back to Scott's comments, is that it's a much more positive market. So you know, there might be the odd lender that has to make the odd strategical tweak to a particular product, but I think, you know, we're starting to get into a period now where we've got some certainty of where rates are going. So hopefully we'll see probably more logical pricing, if that's the right way to put it, going forward.
Yeah, that's fair.
I think the other thing is as well on that point is we've got a legislator for the upturning business and the increased volume. So some lenders want to retract a little bit. I mean, I'm sure every lender's got a market share they need to strive towards. And once you hit that, the logical thing is to pull back a little bit. Albeit, you know, I think the appetite for lend at the minute is great.
Yeah,
I think some of it as well, you know, as you say, the rates might be doing that, although swaps have sort of just, you know, bobbed it up and down a little bit over the last
they have.
They're not being really major significant moves, but, you know, some of it will be about protecting service, won't it? You know, that'll be, you know, some lenders come in, put a good rate out, take the volume they want, and have to pull back a little bit. So there's other factors at play, isn't there, as to why lenders are pricing in one direction, others are going the other direction.
Just a little reminder to those of you watching, we have you can make comments on the LinkedIn stream. If you've got any questions, just add them in there. We'll try and make it as interactive as possible. But let's get on to new build, because that's why we're all here. Craig, very excited to talk about this. So Craig, you've been in new build for man and boy, I think, haven't you? You've been like for ages.
I think I had hair at the start. I'm not sure about Scott, but I
you had hair at the start of this broadcast. So obviously new build's a massive topic, and before we get into, you know, the various schemes and etc., I'm just interested, Craig, what's the view from builders around the market at the moment? What are they seeing, and are they able to do enough to build the types of homes that people want and can afford? What's their overall view of the year?
I think you know, if you look at the trading updates from the majors over the last few weeks, we've seen, you know, Taylor Wimpey and Persimmon and Barratt's and others put out their trading updates, and you know, it's challenging. You know, we've seen, you know, the you know, a number of the top 10 house builders completion volumes fall by anything in around 30% over the last sort of 18 months or so, and likely to carry on at a similar-ish level to last year this year. So whilst we're seeing a bounce back in our market from a consumer demand perspective, it's not necessarily coming through in terms of build programs. And I think, you know, it's fraught with challenges at the moment. I mean, the biggest challenge, you know, for forever, it seems, is planning. And it just seems to be being kicked around by governments. You know, it's in a manifesto pledge, or it's in a white paper, or whatever it is. We're going to fix the broken planning system, and some of the changes that have been recently brought in, I think, you know, talking to the HBF and others, have suggested that the planning has got worse. Obviously, then taking away the central target, and then taking away the central target, you've seen local authorities tearing up their local plans. So, you know, it feels like it's gone from, you know, if we go back a few years ago, Conservatives were pro house building, and when they had the coalition with the Lib Dems, and, lots of activity, lots of support for first-time buyers and government schemes, to where we are at the moment. It feels like it's going to be anti-house building now. You know,
That's interesting.
Whatever you think around sort of Gove and so on, and some of the challenges, I think he's had some fallout with the sector, but yeah, one of the things he has worked hard to address is sort of building regs, building standards, some of the challenges around cladding, which we've all seen there's been some positive moves there from the industry to take responsibility, and also lender support for that. But on the other side, as I say, the supply side, it's fraught with challenges around planning. You've got the future home standards that's currently in consultation. What does that mean? What will the builders need to do in terms of bringing in new technology and building more energy efficient properties going forward? So it's and all of that regulation, legislation comes at a cost to the builders as well. So it all has to be paid for at a time where we've got affordability challenges. So there's a lot of challenges, that the builders are faced into, notwithstanding the challenges that we've had in our market around affordability. So big challenges on the supply side, but as we were just touching on, the demand side is getting better and will get better still as we move forwards.
Scott, what are you seeing in the new build sector generally?
Yeah, I think Craig's absolutely right. Is it the nail on the head? I think the planning system in this country is completely shot. It just doesn't work. It's not worked for a long time.
They've been talking about that for, it seems like, generations, hasn't it? Every government for decades.
It's just shot. It's just shot. And if you're a developer, the best laid plans, you've got something through planning, and your sort of, I guess your plan is to build large 3, 4, 5 bedroom houses, which, let's be honest, through Help to Buy era, has been very popular. So you can almost miss a step, if you like. So you go from being a second time buyer where you would be, and it's all aspirational purchase. You miss the big 3 bed and you go straight to a 5 bed because Help to Buy allows you to do that.
Yeah.
Then it's if you're still on that track and you've got plans, that's gone through plan, all approved, and then you have to go retract it and go back. You've got to go back to square one. These developers, they're just not going to do that. They're just not going to do it, because it just takes far too long. And I think then, against the backdrop of, we keep saying this, is developers have had a hard time. The last 4 years have been, I'm not feeling sorry for developers, by the way, but they've had a hard time, against the backdrop, against the backdrop of, a mini budget, inflation, base rate rise, cost of living crisis. We forget Brexit happened in the background, and then you've still got a legacy of COVID. Yeah. Now, what we're seeing now, I'm seeing more new sites being launched than I've seen in the last 3 years. So that tells me, some of these developers have properly got their head around these things. They are launching things left, right, and centre, which again is very, very encouraging. So you're getting this next tranche of people, this fresh tranche of people going into these new sites, which again is great for everybody. It's absolutely great for everybody. We've just had a very, very difficult time of it. A very difficult time of it. And at the backdrop of all of that, dare I say, Help to Buy has gone. It disappeared. It ended, which did, for all intents and purposes, for a 10-year period, it did resolve quite a lot of issues.
Yeah, it definitely propped up that market. I think it's interesting watching where and some of the new build sites that we see. It's interesting where they build. So and some of them tend to be in places where lenders don't really want to lend on those developments. We've got one at the moment that's, it's right behind a train track next to a metalworks and opposite a homeless shelter. And lenders just don't want to lend on that type of build. Is that a consequence of they have to build where they can because planning is so screwed? Or
I think that's a factor. I think you got to take into effect the cost of acquisition of land as well. Is it can be very, very, very expensive in the the areas where you probably go, well, that's where I want to live, but where can I live is probably a little is probably less, to be honest. I think you've got a whole raft of issues around that. You know, you've got land banking from some of the developers that goes on for decades and decades and decades.
Yeah.
You know, so again, I think all of that is a bit of a minefield, to be honest. It really is.
Yeah. I just want to pick up on something you said, Craig, around EPC and energy performance. Is there really because some of the new builds, you know, they're just about getting a B rating rather than an A. Shouldn't everything built now be sort of A star in terms of energy performance certificates, and
I think
how are builders meeting that challenge?
I think it's widely known that perhaps EPCs is not the long-term solution. You know, I think, but to your point, I think, you know, I think it's somewhat 85% of new build properties are A or B rated. A lot of what is being built now, I think from memory, is off of 2017 building regs, and this is where obviously things like future home standards coming in. We're going to see, you know, less carbon emissions, more energy efficiency, more technology, which, you know, should start to see, you would hope, pushing that closer towards the majority being A. But I know there's a broad review looking at SAP rating, looking at a new home energy model. So there's a whole, which then is not just at the point of purchase, as that ongoing measure of that performance of that property. So I think, you know, the challenges with EPC, I think, let's see what Future Homes brings, but it's then about the technology to get it to an A or a B, because, you know I went to a Taylor Wimpey site, part of a Future Home Standard site that they've got in Sudbury, 6 different properties with 6 different types of tech, and, you know, they're not all on the same EPC ratings. So, you know, again, it just shows that it depends on what, you know, it's not just about, you know, putting solar panels on the roof. You've then got to think about the battery to go with it to maximize that, and then you've got to think about the tech that's running it. But it's not just as simple as putting an air source heat pump in or some solar panels. It's the combination of the tech, but it's also about the fabric of the property, because you can have all this wonderful tech, but if you've got a really leaky property, it's all seeping out of the seams. So
exactly.
So, you know, I think it has to be fabric first. So it's how it's built, what it's built with, and then the technology that comes with it that makes it even more energy efficient. So it's a combination of everything that gets you to that EPCA, and actually to a place where you could be making money. So you could have zero bills and selling energy back to the grid and making a bit of money. So I think that's the future, isn't it? Is seeing your home beyond just it being a home, actually using it in a way that it can generate energy and maybe generate some income.
Yeah, that's interesting. And so, Paul, are we seeing? Do you think generally we're seeing more appetite from lenders for new build and that market, especially around higher loan to values? How can lenders help the new build market more? And I know, is there some kind of tech that can help in that area as well?
You know, I'm old enough to remember Craig banging on the fact that we need to have higher LTVs in new build for years and years, and you know, we have seen lenders' appetites in terms of LTVs get a lot better. I mean, probably the biggest move lately was Santander, wasn't it, at 95 on flats and houses. So, you know, there's more lenders coming in to higher LTV lending, which, you know, hopefully is seen as a positive. But then you do knock into issues around affordability and getting then the customer to fit the deal. So I think higher LTVs, I think it's a much improved position if you looked over the last 3 to 4 years. So some of maybe that sort of stigma around new builders has evaporated from a lot of the lenders. Some of the smaller lenders see it as a real opportunity to access the market now, whether that be new build or shared ownership. So I think, you know, if you look at sort of general core products, there seems to be much more appetite. From us as a lender, we're still concentrating on our core residential proposition. So when you talk about, so how can technology help? I think certainly, we're certainly looking to focus on bringing the certainty of decision quicker into the market. So typically, we can financially underwrite a client within an hour or two, depending on the individual client. I think the other bit which might help the market, and Craig may know a bit more around it, is, so one of the things that stops us automating more than anything else is, certainly in the new build arena, we're going to have to go for a physical valuation. So, I'm not sure whether the surveyors and some of the risk departments are coming up with anything that would allow you to do a kind of AVM or plot. That would certainly help, but I think that's obviously you've got a data gap there, but maybe that's an area that the industry could do a little bit more together in terms of bringing together lenders, their credit risk department, and also working closer with developers, because certainly when you get into that new build space, you're going for a physical valuation every time, which takes longer for it to come through. So I say, generally speaking, Monty, I think there's more lender appetite, and let's also appreciate the fact that it was a tough market last year and people have got targets. So we're all looking to get our volume away. I think a new build has been a winner in that, in terms of appetite from lenders.
Yeah,
Can
Scott,
I just come in on that?
Go on, Craig.
Just come in on that, a couple of things. So I think over the last 10 years or so, lenders have got generally more comfortable with new build. I think the UK finance diff, for transparency, more engagement, more industry collaboration and engagement, so everybody has a better understanding of each other's worlds. I think the other thing that is probably playing a part with lenders at the moment, thinking about supporting new, is balancing the book with, greener properties, going back to the previous point we were talking about. And you have seen a few lenders launch propositions around an affordability proposition around the fact that typically a new build property is cheaper to run, as we were just talking about, and therefore, why would you use ONS data that captures all?
Agree.
Which then gives that enhanced affordability uplift on a new build property, noting that it is cheaper to run. So I think there's a whole myriad of reasons as to why lenders are getting comfortable. And I think, to your last point there, Paul, I think it's fantastic that, given the last 18 months and all the noise in the press that house prices are going to fall, and obviously that hasn't happened. We saw a little bit of a correction, to see lenders going up the LTV curve despite all of the noise and negativity around house prices, I think again has to be commended, really. So sorry, I just wanted to come in on that point about LTVs and particularly the green part as well.
Scott, do you think lenders are getting more comfortable with new build generally, from your perspective, and certainly around the whole valuation, how you value a new build?
Yeah, I think let's be honest, a new build property represents a decent risk from a lending point of view. It's a brand new house. It's a brand new house. I think there are a couple of things for me that I would like to see more lenders come into the market. I'm not particularly maybe at high LTVs. Look at our business. Our average LTV on new build is hovering around about 82%. So when lenders come in at 95, it's always a bit of an eye opener. And you go, that there'll be a select few people that will want that type of mortgage. I've got 5% deposit. I think the biggest thing for me now in new build is, I think it represents good risk. I think there's availability. I think lenders want to lend on it. It's got to come down to the tech, which I know MPowered are really good at. Look at a lot of their stuff and their turnaround times. New build, if you've got generally a vanilla client, why can't you underwrite it in an hour? We've got open banking, we've got access to credit reports. We don't need people's pay slips per se or anything like that. We can tap into that. Every lender's got access to that. And to come onto the valuation point, I sat in LGSS probably around about 7 years ago, and I kid you not. And I sat next to a young lady, and she said to me, "There's not a property in the UK that I can't tell you the value of." literally the database exists. It's there.
Really?
It's been there for donkey's years. So valuers, why do we still have this stoic, draconian? The valuer's got to go out and he's going to take 5 days.
Yeah, I agree.
Return the value. It
When
just doesn't make any sense to me. I mean,
when it might depend on his mood or what he did last night, etc.
I've literally got one tomorrow. Okay, which is through eServe. And first one down value. So I've got one going off tomorrow for a completion on Thursday. Yeah. So I'm having to ring the valuer and go, what time are you actually going? And he goes, well, between 10 and 3. I'm like, surely you can be a little bit more specific. I've got somebody sat in a van on Thursday wanting to move.
Just on that valuation thing. So eServe have launched a new build remote valuation for the very points that you guys have made. That why would you from our own business perspective and carbon emissions and efficiencies, sending a value out to a site that he went on yesterday.
Yeah, it doesn't make sense. Yeah,
it doesn't make sense. So we have adopted a first on site. So the value will go first on site assessment, inspection, get all the documents, upload it to our new build portal, the new build platform that we've got. I say we, because eServe is part of LSL. So where possible, subject to certain bits of criteria, which don't ask me what they are, but we will do a new build remote valuation, and eServe now work with 7 of the top 10 lenders and 4 of the top 5 for new builds. So there'll be
It is getting better, and we are seeing more and more of it. It's just we've got to get to a point where we're not reliant on someone physically getting in a car and driving out and to wait.
It'll be good to get more pre-approval of sites.
Yeah, I think it becomes early. It becomes data led then, doesn't it? Rather than, as you say, somebody depending on where they're at in their mindset and the day of the week or whatever. If you've got hard coded data,
we are data led, though, aren't we? That's what
we are data led. Yeah, and if you're building a range of properties which are all going to be very similar, you don't need a separate valuer to go and see each one. It just doesn't really make sense.
Well, the real sort of dilemma there, Monty, is when you get one so identical house types side by side, a difference in valuation.
Correct.
And some of them, they're not logical. You can get you look at a disparity of 20 grand, and you're going, how is that possible to get a 20 grand differential? Doesn't make
and we do see that where actually I've had that a couple of times, not recently, but a couple of times where actually the developer has phoned us up and said, we're not letting this valuer on site because we know what they're going to do. We've had 5-6 different valuers. The other 4 or 5 have all come in at a similar-ish level, and this guy, it's usually a guy, is consistently down valuing by X amount. We don't understand why when all the others are at this level. So it does happen where you get someone with a bee in their bonnet about a development or a house or whatever. And that's a whole other podcast, I guess.
Get a valuer on the next. Get a valuer on the next one.
Yeah, we will do one on valuations and stuff. I think that'd be interesting.
It's where you get the instructions, Monty. Instruct anyone you like except this particular individual.
Yeah, exactly. Which obviously you can't do, but I do get it. It must be frustrating for them. Yeah. So on prices, obviously we've got Help to Buy scheme has gone. We've got the Own New scheme, which has come in, which is essentially pretty much a private scheme between builders and lenders. And when I first saw it, I thought, wow, that's actually quite innovative, isn't it? It's something a little bit different, which is effectively giving the incentive to the lender rather than the customer, allowing them for a cheaper mortgage rate. What do you think of the scheme, and will it work? Are you fans of it, or is it artificially propping up prices again?
You want me to go first, Scott?
Yeah.
So,
I haven't mentioned anything about incentives yet. I'll come to that.
yeah. Scott, you can take the incentives question.
All right.
No, I think look, you're right. It's innovation, and if we go back to the start of 23, end of 22, the builders were offering, we'll pay your mortgage for 9, 10, 12 months as an incentive. Now, in reality, it has to be paid as a cash lump sum. They don't have the mechanism to pay the customer's mortgage. So this is the own new rate reducer is a controlled way of builders' cash, as you say, going across to the lender and subsidising the rate.
It's a great idea.
Often, because if the cash goes straight to the customer, it may well be that the best intentions are they are going to use it towards paying their mortgage for the next 2 years. The reality is they'll probably see a holiday. Look, Scott's got a nice tan. Scott's been to the Maldives, and I want to go off to the Maldives or somewhere else again, or have a new car. Those temptations are there, aren't they? When you've got that burning a hole in your pocket. So I think this is a controlled way that means that customers can get rates that were akin to what we saw a couple of years ago, 2-3 years ago, sub 1-2% rates. Brilliant. So those people that have sat on their hands, waiting or hoping for rates to go back to levels that we saw 2 or 3 years ago, then this is a way to do that. Look, let's make it clear. It's a standard mortgage. The customer is assessed and stress tested in exactly the same way as they are.
Absolutely,
they are just getting that enhanced rate for a 2 or 5 year period. Obviously, the longer the period of time that, if it's a 5-year fix, clearly the cash has to be spread over a longer period of time, so it doesn't reduce the rate by as much. So I think it's great innovation, and great to see lenders like Halifax and Virgin, as well as Furness and others coming down the line as well. So a spread of lenders. I'm sure there'll be more in due course. I think it won't be for everybody. I think that's the key thing is that, if you haven't got at least 10% deposit, give or take, then you might not even qualify for the scheme. And some people may well prefer to have a smaller starting balance, i.e. take that cash, have a smaller mortgage, and you just go on your way. But others might want that extra bit of cash in their pocket right now because of circumstances. They might be moving up the chain, they might be having another child, and therefore that sort of a bit of a payment break almost for a couple of years it could be a welcome boost, providing then that they fully understand that when that 2 or 5 year period ends, obviously the rate's going to go back up to whatever the rates are at that point in time. And that's the key bit, is making sure the customers fully understand what they're going into.
And that is the key point about all these schemes, isn't it? Making sure they're advised properly. They have to go through a broker who's qualified, who's done the test. I have done the test. I did pass second time. Don't tell anyone that. It was actually trickier than I thought it was. I just went into it blasé, thinking, I'll pass it, and then actually thought, well, actually, I need to do a bit of work around it, which is good. It's how it should be. But so it's making sure the right people advise on it, and it is open to all brokers, isn't it? And it is open to
specialist new build brokers. It is specialist new build brokers for now.
Okay. So that's quite an interesting comment in itself, because the question there is actually what makes a specialist new build broker. So I wouldn't call myself a specialist new build broker, but I understand new build. I've got loads of experience in it, and I'm pretty sure I could do a mortgage just as well as anyone. So is there a bit of, actually there's a little bit of unfairness in this? Is actually that builders, for example, will only go through certain brokers, or is it actually, well, do you know what, builders are fed up of it going to brokers who think they can do it and then muck up the transaction? That's what gets a lot of brokers backs up, because there's some really good brokers out there who wouldn't call themselves specialist new build, but can certainly do a deal just as well as anyone else. Scott, what do you think?
I agree with that. I totally agree with that. I think there are some, our industry is potted with lots of, really talented people who know what they're doing. That they're very competent people. I think specialist new build broker. What would that mean to me? Is from my perspective, I think if you're in a business which is predominantly your business source is new build, you might want to call yourself, and it's just a name. It's not, there's not a qualification to be. You might want to call yourself a specialist new build broker because that's the arena that predominantly that you work in. But conversely, then I would say, well, you can't label that person as a specialist new build broker and then, dismiss them being good at buy-to-lets or anything else.
Yeah, exactly. Yeah.
You have got to be careful. I think just to clarify, I think what the builder wants or what the builder's looking for is somebody that predominantly works in the new build arena, that purports to be a specialist. They want to, as with all these developers, and I know you're going to ask the question in a second, we might get to this, is they want to control it. It needs to be within a controlled environment where they're reliant on somebody that they go, actually, they know what they're talking about.
Yeah.
I'm not,
which is important, especially with this scheme.
I wouldn't. It's like any other specialist subject in our industry. Buy to let, commercial, bridging, whatever it may be. I actually don't think you can be a jack of all trades. I don't think you can, because I think the market is vast. It's just too vast. It's just too huge. So I think specialist. Would I call myself a specialist new build broker? Well, 50% of the business is new build and 50% of it is client bank. So I'm not sure I would or I wouldn't. Do I do new build? Do we do it very, very well? Yes, we do. So that's how I'd sort of deem it.
Yeah.
I think just on where it's at the moment with the sort of restricted distribution aspect, for lenders to get comfortable, a lender the size of Lloyds Banking Group to back this from day one. I think this has primarily come from the lenders as well as I think it's not just the builders, it's the lenders as well, to get comfortable for this product to get to market. Is it the right, as I said, it won't be the right thing for everybody. You've got to put it alongside. There are still some government schemes, Help to Buy's gone in England, it still exists in Wales. So would it be the right thing to do Help to Buy in Wales or own new rate reducer or shared ownership or first homes or, so there's different private and government-backed schemes. Then you've got all of the other complexities that just sit across the market. So I think you can sort of see why it is restricted for now. It's only been live for about 3 weeks. 6 months' time, it might be open to everybody, as long as you've gone through and done the test. So let's wait and see where we're at.
There are two good things. There are two great things about this scheme, and any scheme like this is it's giving the customer options. That's the first. So it's an option. And I think the second thing is it helps the developer to drive activity to site. And so if it's a way of doing both, and it does it successfully, and Craig's right, it's not going to be Help to Buy. We know we're acutely aware of that, but it's an option for the customer and it's an option for the builder, and that's never a bad thing for any of us.
So very good answers there. Well done. So I'd like to ask this question, because this is, and I have been booed at a conference for asking this question, at a new build conference where actually you were probably there. It's an old LNG one, Craig, when I did ask a panel about this. So I have a thing about incentives. This is me personally. This is not a view of any of the organisations I represent. This is my own personal view, where I hate incentives and I think they should be banned. That's because I believe that they're artificially keeping the price high. Am I missing the point here? And is it as simple as saying, actually, if you're a builder, instead of selling it for 500 with an incentive, sell it for 450? What am I missing here? Starter for 10.
Well, I think, look, it's a supply and demand thing, isn't it? If we were sort of chatting off air that if you've got a queue of buyers that are good to go. Builders that don't necessarily need to deploy an incentive. It's there for them to use as and when they need to. Ultimately, it's coming out of their margins, so it's a tool in their toolkit. In the same way in the second-hand market, you'll go around a series of estate agents, get 3 or 4 or 5 prices. Often you might go with the estate agent that gives you the highest price. Is it going to sell at that? Or are you going to end up having to reduce the price and therefore discount it? So there's discounting. There's not incentives in the resale market, but there is discounting.
Yeah.
And ultimately, it's deploying. Rather than have to reduce the price, because once the builders reduce the price, it's on the land registry. It's there for all to see. That then affects what the future sale prices of the next phase and so on and so forth. So it's there that if they need to help smooth the wheels because demand side has slowed, they can deploy incentives in different ways, whether it's to top up the deposit or legal fees, etc. It may well be that, I think the long-term average of incentives is probably about 2.5% when it has to be used. In the last 12, 18 months, we've seen it probably get to 5% on a regular basis because we know why. The market's been a lot tougher. It's gone from a seller's market to a buyer's market. But I think it's not necessarily about anything underhand. It's a tool to use at different times of the sales journey on that particular site. I mean, Scott will see this closer. Scott's closer to this than I am at different points in time on a site. At different phases, they'll be deployed depending on where they're at with demand.
Yeah,
Scott.
I think builders are, the commercial entities, they'll do what they need to do to get things over the line. And if we go into the market that we're in on some of the sites that we're now looking at, they won't offer incentives because they won't need to. So there's no, you can turn up and you can, they don't have to offer you anything, start at that level. But if they need to do something to make a deal work, or it's just the site is slow, or it's a stop plot at the end of the year and they need to get it through, then they will do things like that with customers. I think the dilemma you have, Monty, forgive me if I'm wrong, is does it affect? Are they elevating the price? Is the value? Is it falsifying the value?
Which I always understood was why sometimes some valuers and lenders had an issue with new build originally.
I think possibly in the past,
maybe not so much now.
Practice. I think the fact that everything is now, in terms of the CML, the UK diff.
Yeah,
I'm not seeing any. I'll be dead honest with you. I'm not seeing any more down valuations than I've seen. In terms of increasing down valuations than I've seen for a long time. So
no, that's fair.
Does that make me comfortable that they are correctly priced? Well, of course it does. But conversely, just to finish on, if you've got a site where you're selling houses and you release 20 houses at X price and they all sell within a week, then the sales director and the MD of any developer is going to go, right, okay, the demand is there. We need to start pushing the price a little bit. That's where you have your dilemma. But it's supply and demand. You pay. You pay. It's worth as much as someone wants to pay. Yeah.
So God, there's actually loads to talk about with this. So what more can the government? What more should the government be doing then to help? Because we spoke at the top that they've abandoned house building targets. Housing is a massive play going into the general election, but there doesn't seem to be anything there from either side, is there really? And there needs to be a long-term plan joined up.
There's a consensus, isn't there, what the problems are? We all know that. But like you say, I mean, you only got to go through how many housing ministers we've had in the last 15 years or whatever. So I think, whichever way you look at it, from a developer point of view, a lender point of view, or consumer point of view, I think you're right. You need a long-term structural plan, because the demand isn't going to change, is it? We're not building enough houses. We scrapped the 300,000 a year target. I don't see any sense that Labour want to come back and put a number on a target. Tell me if I'm wrong, Craig. But and it also appears that there doesn't seem any momentum around Help to Buy coming back. So it's probably one where it's one of the biggest issues when you talk to people outside of cost of living crisis. I think the politicians just need to. We probably as a country need a longer term solution that brings all the parties together.
Yeah, totally agree. Led by an independent housing czar.
Monty,
Craig might be Craig. No, it might be Craig more than me.
Yeah.
Fancy that job, Craig?
I love this job. It's a privilege, but I think that one might be a step too far. Yeah, no, I think look, it's there's been calls for a long time, hasn't there, to have an all-party to sort it. Whether is that going to happen anytime soon? Probably not. I think Labour are talking about bringing back a central target. Actually,
I think they were,
and they're certainly talking up housing, probably more so than what the Conservatives are at the moment. So I think, look, there wasn't a great deal. There was nothing in the autumn budget. There was nothing really to write home about in the spring budget. Whether they're keeping the powder dry as part of their manifestos, this, going into the general election, we'll have to wait and see. Whether there's another major fiscal event before the general election, again, only time will tell. But I think, look, we need to sort it. House building of all tenures, I think that's the other thing. It's not just about owner-occupiers. It's about the PRS. It's about social rents, affordable rents.
100%.
It's got to be across all tenures. We need to build more right across the board. And right now, planning and all the regulation and rising costs, etc., is a major barrier, and that's why we're seeing, potentially the merger of Barratt's and Red Row. Will we see more of that to come? To try and be a bigger superpower to tackle some of these broader challenges. Again, will that create? I think the question is will that create more housing? That's what they're suggesting. That's the reason of bringing them together. But and I think that it's not just the big corporates. If the likes of Barratt's and Red Row feel they need to come together, well, where does that leave your SME builders? Those numbers are dwindling. And there was a paper that went to number 10. I think the HBF were behind last year. That really showed how difficult the SME house builders have got it. So we need all builders of all shapes and sizes to be doing more, but we need an environment that helps them do more. And ultimately that all roads point back to the government on that. So I think we need that side sorting. I think we're starting to see some innovation in our world, as we've talked about, and lender confidence returning in new build. Yeah. But I do think, it will be interesting to see whether there is a help to, I don't want to say help to buy 2, because we had one of those before called the guarantee scheme, but a help to buy 3 or something to that ilk. Yeah. Shared ownership is been growing with interest, not just from a government perspective, but also private support. We're seeing new private entrants coming into shared ownership, which is welcome. There was obviously the talk of the 99% mortgage. I was never really convinced that was the right thing.
No.
But so we'll. I think it's a big year, isn't it? There's never a dull moment in housing, and particularly the new build sector. So I think this is a big year, and let's see what comes out of those manifesto pledges, and I guess more importantly, what gets delivered from those manifesto pledges in the long term.
Yeah, good. Right, we're pretty much out of time. So any final words of wisdom to brokers and borrowers in today's new build market, Scott?
Yeah, you stay away from it so I can have it. No, I think anybody that's in the arena and is looking to get into the arena of new build, there are encouraging signs. I think we've had a very, very difficult and rocky road for quite a prolonged period that I've never seen before, to be honest. And I think we are just seeing the green shoots. We're just starting to see this recovery with new sites, new schemes. Lenders have got a real appetite to want to do this business. So I think if you sat where where I am in terms of what we do, I think I would say nothing but positive things at the minute. But touch wood, you never know.
Yeah, Paul.
Yeah, similar. I think from a broker's point of view, I know you talked about the own home, being mainly specialist brokers, but there are a number of schemes out there. So encourage brokers to make sure they've got they understand the opportunities for their customers, because as Scott said, there's more footfall coming in, and actually I think when we talked about the energy piece, I live in a sort of 1920s old property. I know when I had my extension done, I couldn't believe the small amount of foundations this house was propped on, and I know how leaky it is. This has been this winter, so I think new build. We talked about the increasing legislation to make them more energy efficient. I think that's for a consumer to be able to buy a property.
Yeah, I agree.
That's really, you go, actually, I've not got much worry here, and it'll either pay for itself or start to pay me. I think there's a huge opportunity in new build to really shout about that. I think there's a lot of consumers that would be really interested in making sure they get their next property potentially fits that bill.
Yeah, I agree.
I think on that, Paul, as well, my property's 15 years old, and I looked at retrofit last year. I looked at solar panels and batteries and stuff like that. Bloody hell, it was expensive, and then so, and the payback was something like 10 years, and I've got a 13-year-old daughter that's expensive and a nearly 10-year-old boy, and so that's the challenge, isn't it? Yes. and then if you put an air source heat pump in, actually that it's not just, there's a lot more to it than that. It's all the infrastructure in the house that goes with it. So I think the government needs to do a lot more there around grants and education and funding to support the retrofit piece, and that's where, to your point, you can see more people looking at new because of the energy efficiency. But I think, a final couple of points really, I suppose, is that, stay close to your network, stay close to your clubs, because there's a lot going on in the market. Stay close to your lenders as well, your BDMs, because obviously it's great that we've seen in the last few weeks quite a bit of positive change in new build criteria from a number of lenders and innovation. So, well done to the lenders, and thanks for your support, and good to chat to you guys this morning as well.
Thank you. Yeah, I think the new build sector will be pretty vibrant for the next couple of years, and I think it's going to be a very interesting space. So anyway, we are definitely over time. So thank you to our guests. Thank you, Craig. Thank you, Paul. Thank you, Scott. An article about the live will appear in the Intermediary, and I do encourage you all to get involved with Newspage. We want to start shouting out our Star Broker of the Week at the end of each webinar, so please tag MPowered on socials when you've seen a broker go above and beyond. And this week, shout out to Star Broker of the Week, Harry Goodwin. Hello. At Derbyshire Mortgage Services. Harry's being recognised for his exceptional service, expertise and swift communication, which made his client's first home purchase a breeze. He worked tirelessly to secure them the best deal, while also ensuring they felt better educated on the mortgage process. Well done, Harry. Finally, remember you can listen to all of these on Spotify, where you can find all 10 episodes. If you have enjoyed it, thank you very much. My name's been Andrew Montlake. If you haven't enjoyed it, I've been Michael Gove. Until next time, have a great week.
Cheers all.
Cheers.
Cheers.